let's quickly now go across to our special guest today on Power Lunch. We're joined by Mr. Ajit Gulabchand from HCC, who's joining us from Mumbai. Always a pleasure to have you with us, sir. Welcome to the show. I want to start by asking you perhaps what everybody seems to be asking you these days, the big slowdown question. It's hitting your industry pretty hard, but would you say that things are starting to climb back now?
Well, I think, let's put it that the government has started taking action in providing liquidity to the banks. Though this action is in the right direction, it is not adequate enough for the banks to have confidence so that they can start lending and reduce interest rates. Till such time, you will find that the infrastructure industry is likely to suffer from unavailability of finance, and even if it is available at high cost. So the public-private partnerships at the present moment are going through a crisis. Those who have already closed are now facing an interest rise which is killing them, and those who have not closed are not finding it possible to have a closure. So I think we are not seeing sufficient liquidity in the market for the banks to actually bring down their interest rates and make funds easily available. The equity options are equally poor because the stock market is down, and as far as the pricing being so low, it is difficult, and there is no debt available except through the traditional banking system. So I think this position will need a little more attention from the government, a better assurance by the RBI that there will be liquidity. But they keep selling these dollars in order to shore up the rupee, and that sucks out the liquidity and creates an inconfidence in the bank that there will be always sufficient liquidity for them to lend.
Right.
So I hope that the government, which is on the job, takes serious action to improve this fast.
Now, the bankers, of course, are worried about exactly the same thing, Mr. Gulabchand, and we've heard a couple of them today saying that, look, we're going ahead with lending rate reduction, for example, but we're going to be worried about liquidity. So, given the kind of action we've seen from the banks the last couple of days, would you say at least that's going to bring about some amount of comfort to you?
Well, as I said, these are very serious crisis times. A financial crisis led to a lack of confidence, is leading to an economic slowdown, and we need to understand, in India, even if we go down to 3 and 4%, 3%, given the low base, even that growth rate is technically a recession. So we must be very careful to ensure everything that our GDP growth rate does not go down below 6 to 6.5% if we are to look good to the world and if you're going to look good to investors. Having said this, I would like to point out one thing, is that we are not talking of interest rate drops of 1 or 2%. I would like to see interest rate go down to less than double digits, into a single digit interest rate, and sufficient availability of funds in rupee funds. Now, when that happens, will this investment cycle restart? And that is what will restore the confidence in the investor community that India's growth rate is real. It has dropped a bit, but it continues to be the best destination. And I think that's what we should target for, to make India look good.
Well, a lot of consumers, of course, would love to make you central banker at this point because of that single-digit interest rate recommendation from you. But all right, so moving on then, in terms of your overall capex for this year,
well, I'm sorry,
are you? Go ahead, sir.
It might sound as though I'm making a wish list. No, I am not. I am saying that these are extraordinary times. There's an extraordinary loss of confidence. And I think if you're going to restore it, you will have to take very, very sharp measures.
Right.
And lowering the interest rate in 2 stages down to single digit is one of those measures.
Right, sir. I wanted to talk to you about your capex plans for the year and also the tricky issue of FCCBs. I mean, that's been talked about for some time now. Overall, do you see that you will have to renegotiate the price of FCCB conversion?
See, our FCCB conversions are about 3 years away. So it is too early to say what we should be doing at that, and we are taking a look at this. As far as the capital expenditure planning is concerned, we have 2 options. One is, because we will be incurring capital expenditure depending upon our order book. Our order book is full, all our projects are already capitalized, but if new orders come, which we are hoping we would and which we are confident we will get, then we do have to spend extra on capital expenditure. We would take a look at a variety of options to reduce this by improved productivity, by leasing out some of them, by trying to subcontract some of the jobs, so the burden on capital expenditure comes down. But the fact is that construction contracts are going to go up. Cash contracts is one way that we will wish to shore up during this slowdown, because the government will be using expenditure on infrastructure directly done by it, not the PPP way, but cash contracts as the way to shore up in a slowdown, and we are all there to encash on that possibility. And therefore, we look. The other side is that to fund this capital expenditure is going to be a bit of a problem. However, over these last few years, we have not been drawing advances from government contracts because the money available in the market was way cheaper than what the advances offered. And therefore, almost 750 to 1,000 crores of rupees we have not drawn down for as advances, which are useful as working capital for construction contracts, and we will start doing that. We are also urged the government to remove the interest on advances, thereby making it far more attractive for people to draw advances than to go to banks for funding, reduce the pressure on the bank for providing that liquidity.
Right. And one last thing before I let you go, so the margin picture then for the overall year, would you say that you're going to hold on to those margins?
Well, you know, let me tell you something. We are on course. Our order book and everything is on course. Our real estate programs, the brand new ones are slowed down, but Lavasa is completely on course and has been fully funded during the crisis. We have done 1,400 apartment and villa sales. So as far as we are concerned, all the things that we had to do, we have been doing. And I don't see why there would be a problem in the margins as we predict. But these are unusual times. Nobody can say exactly what would happen. And I would wait and watch. However, we feel confident that if nothing more rocks the boat, we should be on course.
And we, of course, certainly wish you all the best with that, Mr. Gulabchand. Thank you for speaking to us on NDTV. It's great to have you as always.